I'm amazed how many people own stocks.
Welcome to the Playing FTSE podcast. My name's Paul, and each episode, me and the lads get together to talk about the stocks, stock market news, and finance in general. Quick disclaimer, you shouldn't consider anything in this podcast as personal financial advice. If you need such advice, go to a financial advisor. And please remember, when investing in any form, your capital is at risk. So sit back, relax, and let the lads fill you in with all the stock market news of the week.
The sucker's going up.
Quick question. What happened to UK stocks in the last week? Why did they go?
What do you mean?
Why did they go?
UK, I think UK did rather well, to be honest with you.
That's because it's a little exchange that just waits for the US to tell it what to do.
But
Yeah, that is it though, isn't it? Like we sit here like that and we go, oh, the UK's just not, it doesn't do anything. Or we can sit here and go, oh yeah, we'd like to buy the FTSE 100 and stuff like that. But the truth is, like, if the US market goes down, that's it. Well, everyone goes down. EM markets go down as well. So it's just a bit.
The UK can be green. It can be green right up until 2:30, and then the US market opens 2% down. It's like, oh, I have to follow him.
Man. Yeah, it's just. So yeah, like it's annoying. It's annoying to the point. But I tell you what's really good to see sometimes, and maybe traders should be a bit more knowledgeable on this. But you look at the S&P 500, say VUSA, at 2:30, it just goes swoop straight up because it's being affected by all the crap that's going around in the UK because is it Irish domiciled? Yeah, it's Irish domiciled, isn't it? And then at 2:30, it just automatically corrects itself. So if you have got gathered news pre-market in the US and get into it before all the US guys wake up at 9 a.m., you've got some good chances of guessing the 50-50. Well, it's not 50-50 of the market, is it? But yeah, at 2:30.
I believe that's called arbitrage, isn't it?
Well,
I mean, didn't Parik Patel say that? So New York is like 6 hours behind London. I suspect I sense a massive arbitrage opportunity here.
When he mentions Parik, honestly, I cannot stop.
Well, it's like, people. Yeah, Parik's wise. Parik's wise. He knows. He knows. Everyone knows that. If you're in Japan like 5 hours early, you can see the US market coming first. Definitely.
Fucking
Right.
tsunami.
Okay. So how have you done? Have you guys recovered this week? Because
No.
I'm getting there. I'm pretty good. My value portfolio is doing quite well on that.
I did something terrible. I quoted my my gains. The 30k I quoted a long time ago. That was after Galaxy had earnings, so they were bound to come down.
Oh, God,
I quoted before I knew they were gonna come down. So I don't know. Psychologically, it's a bit weird, but then again, it was gonna come down anyway. So
you buy in Galaxy at the wrong time.
No, I got out because these guys put me into the supersonic super thing, whatever it is.
Oh, Arion.
I
talked about last week.
I missed a 20% drop in Galaxy.
Some people are just getting lucky, right? Because I mean, okay, let's talk about last week, right? So last week we had. It sounded like, I mean, on the Discords and on the Facebook groups and Reddit, it must have looked like the sky was falling because last week we had a tiny little blip in the market and all of a sudden it was going into a massive crash. My portfolio didn't feel it at all. If you're in a general value investing style portfolio, you wouldn't have seen that. If you were in a cyclical style portfolio, you wouldn't have even noticed. I think my portfolio might have gone down like 200 quid, something like that, 2% maybe. But I think Nasdaq and tech, very specific parts of tech, might have sold off last week. So
Wow.
Steve D, you're a lot more techie, aren't you? So did you do okay last week, or what were your biggest losers? Where did you lose?
It was my specific portfolio that seemed to fall last week. I think I was dragging the Nasdaq down almost in its entirety. I lost on my my crypto player, which is Silvergate Capital. That was down really big. I pretty much lost across the board, to be honest. I think the only stock I ended up with a slight up on was Bristol Myers Squibb. Everything else was down. I finished the week at about 20% down. So
Which actually, I'm down on Bristol Myers actually. So how are you doing so well on Bristol Myers? Because I'm still knackered on Bristol Myers. I think.
Pound it down.
I think it's pretty much all FX now for me. I think I'm down 10 or 11% on FX. So it's
and
quite nasty.
Yeah, on anything that I bought in July sort of time, April 2020 time, down 10% easy on most of it. You know, some of these stocks that I've got in here, I'm just looking through it now, I'm like 15, 16, 17% up, and it's still in the red because FX is absolutely killing me.
One of mine that went down quite considerably was TPI Composites, and they went down off the back of quite a positive earnings report. So in the earnings report, they basically stated that the demand was so high for the wind turbine products and the composite products that they manufacture that they had to emergency install 5 extra manufacturing lines. And because of that, they lost a little bit more than it was expected. And off the back of that, the share price dropped like 25%. Because of this, it was basically reported as a TPI losing more money, blah, 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 blah. And then they even got a price target downgrade because of it as well. So like a company that's so busy they're having to put more manufacturing lines in, somehow manages to get a price target decrease the day after earnings. It's all a bit nuts really. It's a bit short-termism, but
I think it's all nuts because like let's talk about last week, the tech stock. So the tech stock's little... We can't even call it, even though everything went down at least 10%, we're still not calling it correction in the tech stock and the Autoinvest place, are we?
I mean, some dropped up to 30%. I mean, I know Scottish Mortgage Trust is a UK trust, but they went down around 28%. Now,
heavy Tesla they are though, aren't they?
Yeah, but I mean, because they're in Amazon as well and Illumina as well, and they absolutely got murked last week. And I think the last time we saw this kind of
are you trying to bring this podcast to the younger generation?
We are
get murked. I haven't heard that since I was like...
Aren't they like just using the parents' accounts?
Pretty much, yeah.
I mean, last year, March, was when I saw SMT drop as much or a little bit more. And then it recovered, it doubled since then. But now it's back down, 30%? And everyone in the UK is like, oh, it's a good buy now. I think it's below its NAV as well by 3.6%. So it's relatively cheap.
Hot tip on SMT: they can give you a little bit of access to Stripe and to SpaceX as well, both part of their holdings.
You surprised me with Stripe then. I was like, what is he going with Stripe? And I was like, no, I was waiting for you to say SpaceX because that's what we all want, don't we? We all want a bit of SpaceX.
I believe it's up to 25% in private stocks that are not listed.
Yeah, man. SMT's got a lot of little gems that like all the hype crowd would love to have. All those ones are private.
Yeah, Airbnb before Airbnb was cool.
So yeah.
It's just hidden behind that terrible name, isn't it? Scottish Mortgage Trust. You would look at that and think, oh, don't want none of that.
What, because it hasn't got a sexy ticker symbol or something like that?
Yeah, like Scottish Arc Trust.
Mortgage.
HYPE. Ticker symbol.
Yeah, no,
I get it. It's missing because people don't see it because they don't look into 10K into like kids and stuff, so they just won't see it. They won't know, will they? Look into kids.
People don't look into kids.
KIIDs, like like that's not what we're going for here.
Right, that's gonna do a rewind.
Oh dear.
No, it's like fair, fair dues to them. Over this, are we gonna get over this? Are we gonna be mature?
I'll try.
Okay, but some of the big stocks didn't just go. Steve W, you gotta take this because I guess you're more angry about this one than any of us. Maybe I'm pretty angry about this, but like some of the stocks, they went down. I mean, what was it? Like Argo, how far down did Argo go down, Zach? Your favourite one?
It went down to £2 from £3. 32%.
So it lost a third.
It was quite a lot. But
Yeah.
then again, right, because it piggybacks off Bitcoin, and then it doesn't, because he's got so many different acquisitions going on at the same time. It's a bit of his own kind of play as well. But Bitcoin has been extremely volatile in the past week, hasn't it? Because the market's just gone absolutely mental. So yeah, it's just a case of, do you hold?
Well, that's it. Bitcoin strategy, I'll always say, 4-year cycle, September. September is when I'm probably going to get out of Bitcoin, and I'm probably going to stay in Ether. That's my aim. But other stocks, so we got to think about it. I really want to talk about Workhorse, because Workhorse to me has been the dumbest company of 2020 to 2021, and it's not a crap company. It's got a tidy little operation going on, but the hype behind Workhorse and what's happened to it is just, it's so stupid to me. Steve, you help me out here. You must have something on this.
Yeah, it's kind of almost unbelievable to me as well. I mean, I watched this kind of play out gradually and saw Workhorse generating more and more and more noise, especially on YouTube. And then it turned out that it was initially announced just after we went off air from recording our podcast last week that the USPS Postal Service contract that was something that was being factored into a lot of the pricing, I guess is the kind way to put it, probably wasn't going to them, was going to Oshkosh instead. And then the bottom fell out of the stock, and then YouTubers who had been quite closely associated with that, talking it up in various ways, turned out to have sold the stock. There's some talk saying they wouldn't. A lot of people felt misled. I'm not taking a view. I haven't trawled through YouTube videos to see what people did or didn't say in hyping it. I can't be bothered for Workhorse, to be honest. But what this does kind of hammer home to me is that, look, now more than ever, especially when things are getting stretched, when you're getting volatility around, when you need to be careful what you're doing, you really need to know stuff for yourself and not be listening to what other people are saying, because it's always been the case that if you buy something because someone else said it was a good idea, there's always a chance they'll sell it if it goes down, and you won't have sold it, and you'll be stuck holding it, and you'll be waiting for it to try and come back. Workhorse has rallied a little bit, I think, as there's talk of it there kind of being a do-over on that contract, I think, but I mean, in general, you've got to be so careful with who you're listening to, and you've got to be working things out for yourself and being happy with your own ideas and working out what you're comfortable with, not just following someone who may or may not update you, may or may not be getting paid by the company. And there's loads of it around. It's a biggest disinformation age probably we've seen, I think, in markets.
This is so frustrating for me. This one, Workhorse has always been so frustrating for me, because it's obvious what was going to happen. I had this whole video that I had planned, but I couldn't release it because I just knew that people were just not going to listen. They just were not going to listen. There was three outcomes with Workhorse. It was either going to go well with the USPS contract, it was either going to go badly with the USPS contract, or just nothing was never going to get announced at all. So if we're thinking long-term mindset with something like Workhorse, and that's, I mean, we'll talk about Jack Spencer as well, because I don't think for a second that he's being paid for his Workhorse work, but I do believe that he has solely got to the point where he was because of how much he just read the Motley Fool video, the full articles out to you on Workhorse, and generated his own opinion and generated his own hype with it, but he solely made that money off that. And it's quite frustrating because if you're a long-term investor into Workhorse, you need to value it completely without the contract. You come to your valuation on Workhorse without the contract. You figure out, and unfortunately, if you looked at Workhorse's money at the time, you'll realize it probably had, including the 200 million debt that they take on, they probably had 2 years worth of cash burn left, and at one point they only had a year's worth of cash burn left. These guys are not making money, and they're not going to make money. And one of the quotes that I saw from some of the YouTubers were like, "Oh, we have to go back, and now I have to revalue it. That's why I got out the stock." No, you've been telling us you're a long-term investor, and this is your most critical stock. This is your highest conviction stock, and you've gone and sold it. How can you be dignified at this time, and how can you be? How have you just got any clout about you now? When you've sold your highest conviction stock?
I think Peter Lynch comes into play here because the first thing he said was you need to understand what you own. I think people knew what they owned, but they were confusing conviction with wishful thinking, I guess. Because Workhorse has been here, the hype has been here since last August. And then what happened was they had a partner kind of sister company, Lordstown Motors. And I think there was a lot of contracts going back and forth and a factory being built and being bought from GM at a cheap price. And I think that kind of extended, Workhorse's kind of lifeline. And I think we're now in March now. That's 8 months after. And it's still going. And then Ford came last minute and everyone was like, oh, Ford's never made an EV van. So, we'll be okay. But, I mean, it is what it is. And I think a lot of people did get burnt. And a lot of people were following YouTubers. And I mean, I know myself, I've been watching Workhorse since last August. And at one point I did get in. At the early stage when it was about $15. I think it still is probably $15 today after 8 months.
Yeah, I think it's just come down to probably that. Let's just have a look at Workhorse.
It was about 17 last time I looked.
Yes.
Just to pick up on a couple of things Zach said, pretty much exactly. I watched a Jack Spencer video talking about the drop. I didn't think it was great YouTubing, to be honest. I mean, he was laughing about it partway through it. He seemed very relaxed, very blasé about the whole thing. A lot of people have lost a lot of money here, and this is serious. I mean, the things he said were on the drop to $16, I've written down. In all honesty, that's not bad at all. They could have definitely gone lower yesterday, in my opinion, which isn't what your people need to hear. On selling his position when he said he wouldn't at $13.50, it is what it is, was his comments on the situation in general he's got. Hopefully nobody got burned too badly. I doubt too many people did, in all honesty.
Of course they did.
I think a lot of people did.
You see,
that's
the thing
how
is,
it works.
With YouTube, if you choose to dedicate the vast majority of your coverage to a stock, you're not getting directly paid by Workhorse, you're getting indirectly paid by them. So if you dedicate your whole channel to coverage of just one stock, or vast majority of it's coverage of one stock, and you get the CFO of Workhorse on numerous occasions, you're being paid by the YouTube algorithm, you're not being paid by Workhorse. But at the end of the day, you're still profiting from the hype you've generated in that company and continuing to generate in that company. So to come out and say, I've never been paid a dime by Workhorse, well, your whole channel's based on it. So it's just not true.
I think in general, just try not to listen to YouTubers. I know I'm part of it, but just try. We're all trying to offer our own little bit or our own little slice of it. Well, that's what I'm trying to do anyway. Just trying to tell people things that I'm learning, and hopefully they can take that information away. But when you're sitting there just hyping the same stock every week and new SPACs and all that, this is a recipe for disaster in the long term. I don't know how long this is going to go on for, but it will end. And I think we're the Workhorse, CCIV. Oh my God, CCIV was another one. These are all real problems that are starting to occur with these SPACs and things, and it's just the early stage in a long line of really finding out how good these SPACs are going to actually be. And you need to understand the risk of loss, and you need to know that you can't suffer a 45% loss on every single one of your stocks.
You don't have to lose 45% to learn that losing 45% is bad and it hurts.
I mean, that's the thing, isn't it? I mean, none of us here wants anyone to do anything or buy anything based on what we say here, right? We talk about things we like, we talk about things we think and so on, but for God's sake, nobody go out and buy anything because one of us said so. It might go up, it might go down, and if we're wrong, we can be wrong losing our money, but don't be wrong because we said so and lose yours, right? I mean, we can sit here being angry about Jack Spencer and loads of other YouTubers, by the way, all day long. This is just one example of this kind of thing. But we can be as angry as we like, we can be cross on your behalf, and we can feel bad for you, but we can't bring your money back, and nor can you, and nor can Jack Spencer. So that's what's going to happen at the end of it. All that's going to happen is you're going to do what I did, which is spend about a week being angry on people's behalf before you sit and realise, look, the only way to sort this is to take responsibility for yourself here. You can't buy things based on what other people tell you because your money won't come back. Regulators are too slow on this kind of thing, but you have to live with that idea. Regulators aren't going to save you. There are not, contrary to what people appear to be asking lately, refunds for stocks that go down or anything like that. This is a market, right? And markets are brutal like that. And you've really got to look after yourself.
On that, is GME going back up? I'm just trying to have a quick search for it now. GME is 161% up on the week. So GME is back on the card.
Paul, we did say to you, don't buy GameStop.
Jesus Christ! Yeah, GME back on the cards now. I don't think it's going much further than what it is. They ran out of shares, I think, on GME at one point. I saw something. They have been ending the day with 0 shares available on GME at the minute. So no wonder Trading 212 has decided to close it off again. It's closed off lots of penny stocks as well.
Yes, they have. Yes, Steve D, do you have anything on that?
Only that it's not really Trading 212's fault. I know people like to scream market manipulation now. That's like the cool kids phrase. But in this occasion, it's really got nothing to do with that. It looks like it's a reporting issue between Trading 212, between interactive brokers and the exchanges. The regulator has stepped in and said, you guys are sending an awful lot of OTC orders, like a hell of a lot more than any other broker, and your reporting is pretty poor. So yeah, just sorry reporting.
It's ticking anti-money laundering. Is it anti-money?
Yeah,
no,
it's money laundering.
Fraud, isn't it?
Yeah, because Trading 212 send quite a lot of small orders. They get flagged up as fraud, which is another reason why the execution's been quite slow on them. Sometimes they're quite liquid, some of these OTC stocks, but because they're flagging up as being fraudulent, they have to be cleared. So it's just one of those things where the reporting has to be smartened up on it, and I imagine it'll open up where possible. I think Trading 212 haven't covered themselves in glory. There's been a couple of penny stock exempt or non-penny stock exempt stocks that have gone on that shouldn't have done. But all brokers make mistakes, and if you think the grass is greener anywhere else, Trading 212, they do make a few mistakes, but you'll find them at every broker you go to.
I think they happily kind of say that as well. If you go on the forum, I think it's quite passive-aggressive sometimes, but it's as simple as if you don't like it, go see what everyone else is doing.
You know what the strange thing is, though? Interactive Broker, they offer the same penny stocks still. So I don't really understand what's going on behind the scenes between the two companies, but
it's because when you buy something that's non-penny stock exempt, you have to agree to additional terms and conditions, and because Trading 212 don't serve you with those extra conditions, they have to inform you of the risk that you're taking on by buying something that is most of these companies that people are requesting are they don't even fill out their own SEC forms. They're delinquent with all the reporting. They fail the most basic tests. They're pretty much false shell fake companies, and the OTC doesn't give a shit about that. Anybody could register and sell shares on there and tell you that they're a marvelous company that are making the best batteries in the world or whatever, and it doesn't even have to be true.
Got a nice website with a nice supersonic jet on it.
Yeah.
Ooh, that was close.
A nice CGI supersonic jet on it.
No, they actually wind testing theirs. They actually got a real.
Okay, I believe it. It's not shared in the middle of nowhere. Aerion's a real thing. I'm sure it is.
They've got a clay model, which is real.
You've got a paper one as well.
I thought they built it in an actual sandbox, didn't they?
Yeah, that's what. Well, when
on.
someone says sandbox, I always go
Minecraft.
GTA. So you're building, so you're building this supersonic jet in GTA, but you're just nicking it and just punching the guy out.
They used it in Minecraft with the with the better rendering. What's it called?
Minecraft Simulator. Mr. Beast is the is the Tesla on it.
Yeah, Minecraft with the ray tracing.
All right. Okay. Let's move on to right. What do we think that Rishi's going to say on Wednesday or Thursday? It's March 4th. The UK budget is coming out. It's going to affect us a lot, especially as it's coming up to tax time. I want to start talking about tax probably next week as well. So what do we think? What's our predictions for Rishi? What's he going to say?
I don't think he's going to change much. I think he's probably sort of worried about raising taxes against stimulating an economy. I think we sort of maybe worth touching upon the sort of accidental savers article that was on the BBC. That was quite interesting to see that basically because of the coronavirus, and I'm sure most of you have experienced this, your savings rate has gone up massively. Probably just because there's absolutely nothing to spend it on at the moment apart from takeaways. So
just explain that accidental savers, because even I didn't get it, and I realised that I've read the article now. What you were saying there.
So basically, it's just because there is a lack of things to spend your money on. You've been ending the month when your new paycheck comes in with additional money. So basically, what that has created is a bunch of people who don't normally save anything or save very little of their paycheck have ended up with some savings. And their prediction is that will create a real boom when the economy opens up, because people who don't generally save don't have any sort of strong feeling about saving. The idea is that they'll probably withdraw it all and go and blow it all on a holiday to Portugal or something like that.
Are you sure they're going to do that? Are you sure they just haven't been YOLOing it on GME calls? Because that's what seems to be everyone else has been doing, or CCIV, or any other SPAC you want to mention.
Well, they've probably got the same savings that they normally had then if they've been doing that.
Yeah, so yeah, when everything opens back up, everyone's going to jump on Carnival Cruise Line and they're going to start sailing around the world, right?
Well, they've got to be careful, haven't they? They've got to be careful not to stop that spend. I think the economy really does need that kind of like that like outpouring of money, holidays, trips away, tourism, all the stuff you really, that supports all the local communities. I think it's going to be really, really important. And I think it's going to happen. I think you can feel there's a bit of a built-up angst to spend.
Yeah.
I've definitely seen that about people are desperate to go away now, I think. That'll be the first thing, I think, that we do when it all opens up.
Oh, yeah, Magaluf, you better watch out, because there are going to be a lot of pasty Brits coming your way.
Factor 8,000, like
it's
double
gonna
cream
be
being rubbed on yourself.
Great. So I need some new honeymoon plans then.
It's going to be so ridiculous.
Well, I still haven't had a honeymoon yet, so...
Do you think Rishi's going to tax us a bit more, though? What do you reckon? Do you think...
No, I would be surprised to see massive tax moves coming. I think we're going to see more money getting given out, and an attempt to try and coax it out of the accidental savers that Steve was talking about. I think that might mean... in the short term, there's a bit of inflation going to come through as there's more money swilling around and more money getting spent, which might mean some short-term help for portfolios that have been getting whacked in the UK by FX against the dollar, that kind of thing. But I would expect this to be a fairly spend-heavy budget. I mean, like Steve said, it'll be a good amount of continuing stuff, but I'm expecting quite strong support for the things that are late on in the roadmap for reopening. So like live venues, non-essential retail, that kind of thing.
Yeah, did you have a look at the US one by any chance? Did anyone actually look to the US and see what Biden's doing? I've seen the corporate tax hikes that they're looking at, and the income tax hikes they're on about as well. On one hand, Biden seems to want to raise the minimum wage, but on the other hand, he's going to tax income tax at the same time. So
the income tax rate isn't as high as the figures that have been going around, though. It is based on a like the same way our tax system works, basically, where it's on bands, and it's the same where I think it's up to $40,000, or it might even be more than that. You're not actually going to have any tax changes whatsoever. I think for Middle America, the tax hike is only about 2.5%, so it's not a massive hike. If you're talking about raising the minimum wage to $15 and that pushes people into a higher tax band, that's somewhat problematic. But the actual minimum wage in America is stunningly low, isn't it? I think a lot of people can't really understand. I think is it $6 something at the moment?
Yeah, I think it's $7.
And that's not
last
a
time
lot.
I thought.
Aren't they Don't they want to bump it up to $15 an hour?
Yeah, that's what I was saying. Like they're bumping it up to 15, but yeah, they are on about a tax hike. But you might be right; they're on a similar band, and I've got a feeling it's something stupid. Like it might even be $60,000 to $80,000 where they're going to up the tax hike. But they're definitely going to hit corporation tax, which is going to probably hit anyone.
Well, you see that again that was 35, wasn't it? I think under Obama, and it went to 21 under Trump, and it's going to 28 under Biden. So it's kind of in the middle. It's not like you could say under the Obama years it was a particularly terrible time for the economy, especially towards the latter end of it. The economy was going fine. He inherited a pretty shoddy economy, and by the end of it was doing fine with a 35% tax rate. A 21% tax rate is better for us. A 28% tax rate is kind of middle ground. I don't think there's anything to be frightened of there.
So none of you think Rishi is gonna like lower capital gains, or do you not think it's going to happen now? And it probably will happen later, because capital gains is the one everyone was talking about. You know, they were on about lowering capital gains to like 2,500.
I think you could end up pegging it to your salary instead. So it's moving into the same sort of bands that your income tax band is. I think cap gains at the moment is like 10%, isn't it? Over 12.3 up into another band, and then it becomes 20%. I think based on your salary. I think they're more likely moving that to 20, 40, and 50, the same way your income is. But I just don't think they will. I think at the moment it's all going to be about keeping the economy going, keeping people spending. I can't really see anything else.
If they
Any
do
of
move
you
it,
guys? Oh, go on, Zach.
I was just going to say, if they do move it down to between 2,000 and 3,000, and they do taxes heavily on our stocks, especially in the invest accounts, no one's going to care, right? The general public won't care. They'll be like, oh yeah, you guys made money, so tough. You're going to have to pay up if you're going to sell.
I mean, to pick up on Zach's point then, I mean, that kind of thing would create downward pressure on stocks, most likely. I mean, if your gains are going to be less when you sell them, that means that you're going to need a bigger kind of growth yield or earnings yield or something like that, which means that the price of things is going to have to come down. And this is partly why creeping interest rates in the US on stuff like the 10-year Treasury have been depressing stocks slightly, or at least that's the reason people think they've been depressing stocks slightly in the last week or so. So the thought is that a yield on a Treasury is basically your risk-free rate. And if that goes up, then the more you can get risk-free, and the more you want from stocks if you're going to take the risk associated with them, basically. And therefore they need to be lower and give you more kind of growing room.
I want you to go in a bit more detail on risk-free rate, because risk-free rate is a big thing.
Do you want me to? I've done a little bit on it.
Yeah, go on. Then you made me explain 13Fs last week, so I can have a go at this one.
So basically, I would say, so the easiest way to explain it is if you can get 2% in a bank, and that is completely risk-free, you need to believe you can achieve a certain amount in equities before it becomes worth the risk to take for the average punter. So if you can get 0.03 in a bank, which we're getting at the moment, then 2 to 4% in equities with a little bit of risk is perceived as favourable. But as that interest rate climbs up and as the bond rate climbs up, equities become less desirable for people who are risk averse. So if you can get 4% in a bond or 4% in your bank, or like when I was a kid, I think we got 8 to 10% in an ISA, just a cash ISA, there was really no reason to be in stocks unless you thought you could get 25 to 30% from your stocks. Because 10% a year is a hell of a lot of a return. I know we've been blessed with some great returns this last 12 months, but these are not normal returns in any way, shape or form. That's called the equity risk premium, isn't it, Steve?
Ooh.
It is, yeah. Your point about us having great returns this year is connected to your point about interest rates, basically, because, I mean, the thought is, well, when rates go low, you're happy to buy equities at higher prices, so equities kind of go up, and the return on the money that they're making from them doesn't need to be as high, as you pointed out. If you're making 0.03% or something like that, well, look, you can afford to buy equities at much higher prices in this case, if your idea is to benefit from the earnings that they'll produce.
Is this why people just buy Tesla? Because they think, okay, it's better than putting into a bank, right?
Tesla's its own currency, isn't it? So you put it in Tesla and it just becomes more money.
That's it, right? That's how stocks work in general.
Yeah, because there were people buying at 900 as well, weren't there?
Yeah.
And I wonder what those people feel like, to be honest with you, because I mean, I suppose it's what I feel like with Alpine 4 right now, Zach, because it's down 25%.
What's that website?
No, but
What's that website that went premium recently? What's it called? Seeking
Simply
Alpha.
Wall Street? Oh,
Seeking Alpha just published an article today. It was quite bearish as well, and apparently everyone's just saying that guy has no idea what he's talking about, which is probably true.
Oh man, you made me put if just for
You can't read it because it's behind a paywall.
Just for any listeners, I have trusted Zach doing absolutely no DD on a stock, and I put about 300 quid in it just as a tester, where I say, okay, somebody told me a stock, I know nothing about it, and I'm just going to put money in it, and I'm seeing how well that does. And so far, doing terribly. But I'm going to hold it. I'm going to hold it onto it for a long time. I'm learning more and more about it just by accident as I go along.
Yeah.
Because it's just a very popular stock. But
I did the same, to be fair, with Hive. It went down 30%. It's gone up 15%, but it's still nowhere near where I bought it. And I think I only bought one share.
I think Hive might have been me.
Yeah,
I think I said look at Hive. Hive looks quite interesting.
I did the same experiment with Steve D's call on Hive, actually, which is interesting.
Yeah, okay. We've got off the ball. We're talking about equity risk premiums. And
we have a little bit. Just to bring us back to Professor D's lecture, and just to join up the final kind of bits of dots on that. A lot of what we've been hearing about is inflation from both the US and probably this side if we get more kind of money being given out. And of course, if you're a government, you don't want inflation running too far out of control usually. You don't want your currency getting completely crushed. And the way you stop inflation is by raising interest rates, which basically encourages people to save rather than spend, which slows your economy down a little bit. But it in turn means that the risk-free rate that Steve was mentioning goes up, and the required return from stocks also goes up, and the prices of them then come down. So this is kind of why some people are worrying about the risk-free rate and worrying about inflation with respect to equities. At least I think that's the idea. Anyway.
And I just want to offer both sides of the stocks market on this one, because I think that's quite important to just explain what this exactly has done to stocks. Because as 2020 went on, most people did start by putting into the good high growth, quite safe tech stocks, and then things got riskier and riskier because we thought, okay, we've made 30% already on our high tech stocks. We need to now make 30% every single time, and people needed to make 100%. So they went riskier and riskier and riskier. And that happened to everyone. It's happened to hedge funds. It's happened to probably me as well. It's happened to most people. So the risk required, the return required just requires far more risk at the moment. And with treasury yields going up even very slightly, what that does is it makes people think, oh, I don't have to take that much risk anymore. And for what that it'll make a few people go back into bonds, but bonds are still terrible. There's no reason to be in bonds, and I'll come to that in a second because I want to offer the other side of this coin in a second. But most people now have decided that maybe we don't need so much risk, so we can come back to cyclicals, we can come back to safer stocks. And that will be why myself and Steve W. haven't really seen much of a problem over the past 2 weeks. And while Steve D. and Zach's portfolios might have taken a bit of a harder hit. And that's what we're starting to see. But on the other end, and I wanted to say that because that's made people like Warren Buffett and Charlie Munger and Ray Dalio, it's made them very happy. They sort of started to develop this. If you read their letter and you've seen the Daily Journal interview that Charlie Munger was on, they started to sound a little bit smug, in my opinion. They just started to go, look, this is the start. It's coming, sort of thing. And it does feel like it does feel a bit like it's the start of the big crash, because let's consider it, right? People got a little bit spooked by a 1.6% rise in the treasury yield, and the tech market and the Nasdaq went down 20%, and that's just a tiny little spook. That's off no news whatsoever. What's going to happen when there's serious news, like when there's something real serious going on in the market? what's going to happen to these big tech stocks? They went down on 20% based on nothing. What are they going to do when something like unemployment starts being really bad, or inflation goes up to 8%? Like, that's not unreasonable to think that we are secretly, even though Jerome Powell's going, oh no, there's no inflation, we're not worried about inflation at all, we'll keep it just over 2%, we'll keep it over 4%. That it could rise to 8%, and that'll be a surprise. It'll be a surprise for the markets. How much are we going to see these stocks go down by if something bad like that happens? Zach, what's Jerome Powell been saying?
Jerome Powell has been saying, calm the F down. No, I think he's basically he's siding with the Biden administration. I think it's a change from the Trump administration, because with the Biden administration, he's basically saying, the Fed doesn't need to kind of do anything at the moment, because the stimulus is being pushed anyway by the administration. It's just a case where they're just going to run with it, and they have no choice. I think he's basically powerless in a sense. No pun intended.
Powerless. Lovely. Love it.
And I think because everyone's worried that he's not really doing anything about it, he has to calm the inflation talks as well. And he says there's going to be no inflation. There's going to be no change, because it's just one pump of stimulus is not going to completely, change the dynamics of inflation. And I think I kind of agree. He said overall, like, it has to be a continued
one pump. It was 1.9 trillion. They got the full 1.9 trillion.
There's another 3 trillion after this, they said. So
I didn't know that.
Yeah, there's another pump after this, but he says it's going to be over the long run. It's going to be fine. I mean, if they'd kept doing it over so many months and years, and yeah,
over the long run for Powell, it'll be fine. He'll be retired and or dead.
So
He's not paying it back.
I think they're trying to keep it with 2% inflation. So I think he's just trying to downplay everything, isn't he?
Yeah, that's kind of his job. I slightly fear this, I'm afraid. I take a slightly more pessimistic tone to Zach. I feel like Powell's running out of things he can do. That's not his fault, by the way. I heard a few months ago him talking as though it was going to need fiscal help, needs to take over now from monetary help, basically. And my general sense is that that's his way of saying, obviously can't say it in so many words, I can't do much more, guys. Obviously, if he says that, then it's chaos in the markets, right? There's blood in the streets if he starts saying, that's it, we're done, we've got to try and sort it out from here some other way. So that'll never get said from Powell, but I get the impression that he's either in the mode of lying or trying to tell you without saying, we're running out of ideas here at the Fed.
Get out.
Yeah, he's
get
just
out
trying to
of the market.
get his safe room built, and then he'll let us know it is.
This is it, because he's got to be lying, hasn't it? You can't pump. Okay, if it really is 4.9 trillion, you can't pump that much into an economy and not get inflation. It's not going to happen, right? This is real now. He's got to be lying, and he's got to be just footing the tone. And
if we don't get inflation, though, we're in some kind of social utopia. Let's do UBI and let's never work again.
Yeah, universal basic income. We'll try and avoid acronyms too much. Universal basic income. And I can remember his name off the top of my head now. Andrew Yang is the guy. He's running for New York mayor at the minute, actually. Yeah. And he's got a lot of good ideas. He has got a lot of good ideas. But he was running for president based on the universal basic income present. And yeah, I agree. I don't see why not. Other than there are jobs out there still.
They've tried UBI in a few states before. They tried it during. Here's an odd random fact for you about universal basic income. Reagan was the first person to try UBI, and they tried it in. And I can't remember the state off the top of my head. And I wish we knew we were talking about this, because I would have all the facts for you. But yeah, they tried it in a state, and what they found was that it actually helped the employment rate went up. People were happier. People were less sick. There was less homeless, because part of the UBI scheme that they rolled out was that they gave everybody who was homeless a home. The amount of drugs taken went down as well, and the reason, just to sort of cut a long story short, the reason they didn't go ahead with it, because it was an unmitigated success, was that back when was Reagan president? Was he 70s?
Yes, 70. Oh God, I'm going to go 70.
Yeah. Well, the reason they didn't go
ahead.
ahead with it is because they found that it gave women too much freedom. So women who were not working at the time and were tied to their husbands for their income now had an income and could leave abusive and or mistreat husbands. And obviously the Republican Party wasn't in favour of that. Steve's pulling a face, but the book on it is by Rutger Bregman, and he's a historian, a Dutch historian. He's got a really fantastic take on UBI based on the historic facts.
That was some slightly unfortunate timing on my part, where I was pulling faces at the idea of women being freed. It was more that I just... I'd actually Googled Reagan's presidency terms because I wasn't sure that 70s was quite right. That's what I was looking at.
When was it?
And was it?
Pretty much through the 80s.
Right.
Oh, totally wrong.
So there you go. Anyway, it's a really interesting book. I think it's something to do with social utopia. But anyway, Rutger Bregman is if you fancy a read about universal basic income, it's a fascinating read.
And that's another massive tangent that we've just gone on, which is great. I think we wanted to try and be a bit more free and sort of chat a bit more.
I've got a quote
have
from.
a bit more fun. Go on.
Sorry, I've got a quote from J. Powell. He actually went rap god on us. He says, "Inflation dynamics do change over time, but they don't change on a dime."
Wow, he's gone. He's dropping bombs.
He's gone Main Street.
Get that man in fire in the booth.
We need to get that on our next intro music.
Yeah, actually, yeah, we need to find that. We need to find that interview. Yeah, so that's another tangent we've gone on there. We're trying to keep this podcast a little bit more free at the minute because we have some great chats together and it's never really come across on the podcast. So we're trying to have a bit more fun with it today. But I just wanted to. So the point I was making probably all that time ago. I'm going to do a massive callback here. But the point I was making all that time ago was that on the one side you've got your Charlie Mungers and you've got your Warren Buffett, your value investors, loving the idea of inflation because they're sitting on a boatload of cash. They're not investing in any tech hype. They are ready to just unload the elephant gun, which we bring up every week. On the other side, and I can only bring this up, this is probably going to be a bit of a surprise to you guys because there's probably a lot of details in here that you just won't have to hand. But I watched Kathy Wood's update this month, and she has totally the opposite opinion. She didn't go as far as saying there will be no inflation, but she was saying inflation is a good thing. And even in some parts of the economy, we're going to see deflation as well, which I just don't. I'm trying to get my head around what she's saying. She's saying that there's a bubble in the bond market at the moment as well. There's a lot of things she's bringing up which just seem to suit her narrative. Now, are these things within her narrative or are they legitimate? Are our research team really seeing what everybody else isn't seeing? Because she seems to be the only one, other than the Bitcoiners, she seems to be the only one that seems to think that bonds are in a bubble and there's going to be no inflation at all.
She's going to say that, isn't she? Because she's got massive outflows from her fund.
Yes. Okay, let's go on to ARK Invest funds. We haven't got a lot of time. We've only got about 10 minutes left, to be honest. But yeah, so ARK Invest had a lot of outflows from its fund this week, and it's very interesting because I think a lot of people have started to compare ARK Invest ETF with something similar to the Neil Woodford fund, where she's in a lot of low liquid stocks and it could be that because she's in so many low liquid stocks, in the event of a big issue, and we might have seen something like this because what was it? Did you see something? I'm sure it was you, Steve W, that told me she went on TV and said she's buying things that she doesn't have much conviction in, and when things go bad, she's just going to sell those and buy more conviction stocks. Was there something like that?
I had that at second hand. I thought I had it. I'm going to kick this down the road. I thought I had this at second hand from Zach, but I could be wrong about that.
It was me.
It's
Yeah, it was me. I was waiting for somebody to blame me, and it was me.
I mean, on that note, she is buying a lot of small cap stuff. I mean, she buys the Teslas and the Nvidias and whatnot, but a lot of the buys that they do is a lot of small cap stuff, and it's illiquid. And is she the next Neil Woodford?
She's buying
Dun,
a
dun,
lot
dun.
of. She's buying a lot of illiquid stocks, but she's buying like huge percentages of these companies as well. She's in the 15s to the 20, the 25%.
Yeah,
she's going to be a majority shareholder in some of them, ain't she? She's got to be.
Definitely, yeah. I think.
It's not that long ago. She was struggling to be a majority shareholder in ARK, wasn't it?
Ooh.
That's deep.
Okay. ARK's debt is going to be something that we have to go into another day. We definitely can't cover that today. But okay, so just a quick explanation of what we're talking about, because I think we could get lost here. So Cathy Wood is buying a lot of small cap stocks. So small cap stocks, in the event that everybody wants to get out of a stock with not a lot of shares available, you end up with a lot of people trying to sell the same stock at the same time and not a lot of people wanting to buy them. So it's kind of making a fire exit too small. Is that a good analogy? I have been to some things in the past where fire exits a bit too small. A lot of people have tried to squeeze out of a very small space and they can't get out. I think that's probably a pretty good analogy of it.
I think that's
And
nicked off your
a lot of
man
people
Burry,
get
isn't it?
burnt in the end. Oh, is it Michael Burry?
I'm pretty sure I heard that last summer from Michael Burry, yeah.
Nope, I haven't heard that from Michael Burry, but glad to
well
know
done.
that
You're
someone else.
thinking like the great man then in that case.
Oh, wow. Maybe one very lucky man. I don't know, but I think he's hoping that he's going to be very lucky twice with Tesla, because that's basically what I think that's the plan that will happen with ARK. So if ARK sells off all of the ETFs, if people start trying to sell off ARK ETFs all at once, Cathy Wood isn't going to be able to sell these small cap stocks. She's not going to be able to sell them all. So she has to give the money back. I think this is a very simplified version of it. I think there's a lot more ETF speak in this, but essentially if people start selling off her ETF, the money has to go back to these people, and she won't be able to get it out of the illiquid stocks because they won't be sellable. So the only ones she's going to be able to sell are the high liquid stocks. So they could be something more like Tesla. They could be something like Teladoc. Is one of my favorites, Teladoc. I just never saw it, and I think that company is going to be absolutely brilliant in the future. I just can't buy it. I think it's too overpricey. But this could cause a disproportionate sale in some huge stocks. And to be fair, now you think about it, this could be where Michael Burry's thesis comes from. This could be what he's thinking. He's thinking that some of these big funds and ETFs that own Tesla, that have been pushing Tesla on high volume, it could be that they also own a lot of hypey, a lot of small cap illiquid stocks, and they might all have to sell off at the same time.
Are we coming back to SMT again, because they dropped their Tesla percentage, I guess, of how much they own over time as well? I think ARK's done similar.
I know you're saying SMT again. Just want to clarify. You're saying SMT again. I think that's a conversation we had prior to this podcast, and it hasn't actually been recorded. So we're going to talk about. We're talking about Scottish Mortgage Trust, which is I think that happened. I don't think we were recording at the time we were, because we have these conversations all the time. So we talk about Scottish Mortgage Trust, which, we must have been talking about it actually.
Yeah,
we were talking about. Sorry,
I think we did,
that's my fault. My bad. We'll keep that in. We can see how
Is
stupid
it
I am.
Lynch or is it Buffett who tell the story of the guy who's buying $10,000 of a liquid stock? He rings his broker up and says, I want $10,000 of XYZ stock on the OTC. And he gets $10,000 worth of stock, and then the next month he rings him up and he says, "Oh, how's it doing?" They say it's up 10%. So he says, "Oh, buy another $10,000 of it then." And this carries on and carries on and carries on for 10 years until it comes to selling, and he rings the broker and he says, "Right, sell all the stocks. Must be up hundreds of thousands of pounds." He says, "Sell them to who? You're the only one buying."
Who had it first though? That's it. Who's the chicken or the egg in that one? That's what I'm trying to think. But yeah, no, that's true. There's never a problem with liquidity on the way up. It's always on the way down, and that's what it's just another warning, I think, that needs to be out there, that you need to. Oh man, there's got to be so many upset people on Trading 212 in there one day. Trading 212, the lone customer service caller is going to be like, it's in a liquid stock.
Turn the lights off and go home.
Yeah, he will. Like the little Jimmy, the Trading 212 customer service representative, the only one that's out there.
Looks across at the hamster powering the servers and it's dead. And he goes, "Fuck it, I'm going home."
The hamster on the hamster wheel.
Just had its legs bent off.
Yeah, he looks over, and then he looks at the rafters and goes, "Oh, I could." No, I'm not going to say that. That's a bad joke to say. Oh my god.
Yeah, let's not go with that joke. So, one thing that I kind of think on this subject, just to try and calm things down a little bit, because I'm not entirely sure who's still on this call anymore. If I were an ARC holder, and I'm not an ARC holder particularly, and I don't have much kind of shared vision with ARC and the way they see the world or what they look for in an investment particularly, but if I was a holder in ARC, I would be thinking, just sit still. Things will come round again in the longer term. If you're right, you'll be okay. There might be a big sell-off. You might get whacked in the short term. It's never as bad as everyone's saying it is. Last week, they're busy telling you that Berkshire's done for and Warren Buffett's past it and all the rest of these things. Now there's going to be pressure on ARC's liquidity. Next week, it'll be something else, basically. Don't panic. Sit tight. Think longer term. And don't get distracted.
It's what we say all along, though, isn't it? You've got to understand the holdings in what you own. It's not about just trusting the fund manager. It's more than that. If you think Kathy's got great ideas, then that's fine. But that isn't reason to buy her fund. You've got to look through those holdings and say, are these things that if Kathy wasn't around, that I would pick? And if they are, then buy the fund. If they're not, then you can support Kathy and not buy her fund at the same time.
Yeah, their presentation is basically some inspiration mood board. Essentially, as well, isn't it? For the next decade.
Inspiration mood board. I like that.
Pinterest.
Always has to try and throw Pinterest. Oh, I like that. I like the idea of ARC Invest just being one of those nice things you see at a wedding, where the wedding organizer goes, "Oh, here we go. We're going to put like nice loads of different colours, and you can all choose, and we'll make one just." We'll make your whole wedding just very beautiful based on your ideas. That's an interesting way of looking at ARCG.
So they're wedding planners, and then it's self-fulfilling prophecies.
Is Kathy? Did I read that Kathy's 65? Is that true?
Yeah.
How much longer do you think she'll want to be involved in running a fund?
How old's Warren Buffett?
About 307.
Well, she's going for Warren Buffett. Oh God, I'm going to open up another can of worms here. But I saw an interview with Chamath the other day, who said he wants to take Social Capital public, and he wants to be the next Berkshire. He wants Social Capital to be the next Berkshire Hathaway. He wants to be the Warren Buffett of the future. I thought, oh my,
full of iPods and iPocs and iPods
and iPoo when we get there.
Oh yeah.
You never know. You never know. Like maybe people looked at Warren Buffett in the 60s and went, ugh, a sugary drink. Ugh, that's not going to go anywhere. And
Exactly. It's still got the same formula today, you know.
yeah,
No, it hasn't, is it?
Yeah,
I think
similar.
I-
Well, it's got reduced sugar.
I think the first formula of Coca-Cola actually had cocaine in it, didn't it? Is that
That's what I hear. That
is
sounds
that a-
like.
Yeah,
sounds
am I
like the
pushing
kind
a
of thing
myth
that might
here?
Be, yeah, I don't know.
I might be pushing a myth there.
Can I just say that Coke is the nicest first taste ever, but then the rest of it is awful, and Pepsi is good all the way through.
yeah.
And where'd you put lager in that, or where'd you put a nice cider on a summer's evening?
Yeah, they're nice all the way through.
Yeah, I suppose so. Yeah, and Pepsi. Those cherry versions
Raspberry.
of them, though, they're oh.
I reckon pineapple Pepsi's coming. They launched it in Egypt last year, I think. That's
Yeah,
on its way.
I think these guys are running out of ideas, to be honest, because
We're doing our best here. Sorry, those guys.
no, I think Coke and Pepsi are really running out of ideas. I've been looking into their financials recently. It doesn't look good. I will kind of want out at the first opportunity.
I've
that I
had this
can get, to
conversation
be
with
honest.
Steve that I think anything involved in sugar at the moment is dangerous territory for me. I think sin stocks, we're moving on from the cigarette stocks. We've kicked the shit out of them. We're on to something new now. And I think sugar is probably likely the next on that list. I think oil, sugar.
Sugar tax. Didn't we introduce it in the UK?
Yeah, and I think it's going to be everywhere. I think they'll be looking to cut sugar in everything.
Yeah, because we want aspartame.
Yeah,
And
I don't. Well, I've got to say, I watch a lot of all those fitness guys, and they're quite pro aspartame because it's got no proof of cancer or anything like that. It's all a lie, and apparently aspartame is extremely safe. Let's not get onto
Jesus.
let's not go that far. But when I want to challenge you on the sin stocks as far as Altria and Philip Morris and who's the other one?
Imperial brand.
Oh,
Tobacco?
Baton Imperial Brands. Yeah, I mean, have we really kicked the crap out of them because they are still making money? But we need to remember this: they're not. I don't think they're losing revenue. There's in emerging markets and things. For some reason, as emerging markets and middle class become more wealthy, the first thing they seem to go to is cigarettes, cigars, and, well, in the future it's going to be marijuana, right?
the marijuana stuff is not that popular here. I mean, because it's obviously not legalized. But I have heard the NHS is opening up to the pharmaceutical side. I think I read an article recently.
I think the UK's worry is always with legalisation is that they don't want to be the party that does it, and it's wrong. The science is wrong. I think they're really worried about things like that. So
Yeah, fair enough. We'll touch on marijuana another day because that's going to be a whole load of time, and we've really run over. We're an hour in now. So thank you very much to everybody who has sat through that. We've tried to be a little bit more ourselves today and tried to sort of, just loosen it up a bit. Thank you very much for listening or watching. It depends where you're listening or watching this from. You can listen to this on your commute or in bed or whatever you want to do. Go to bed with Briscoe, Steve and Zach if you want to, on Spotify, on Google, on Apple Podcasts, and I believe on Audible as well. And you can get this the video version of this on YouTube as well. If you have any comments or questions that you want to let us know about, you can leave them in the comments of the YouTube video version of this podcast. We are always listening out for the questions and comments. We're always trying to improve this. And for the last time, thank you very much for listening and putting yourself through that.